Thanks for clicking this Secret Surveyor video. On this channel, we know lots of people want to understand property better and want to be equipped to assess opportunities for themselves. Hopefully, by subscribing to our channel, you will learn what to look out for and possibly find some investments along the way. Click subscribe now and let's get on with the video. Welcome to today's property investment analysis. We will be exploring this £3 million office building. Is it a smart investment? These are the things to look out for. The property is a Grade 2 listed building dating from the year 1840. The office is over 3 floors, includes a reception area and on-site private parking. Let's dive into the positives. Firstly, this is a rare opportunity, as properties of this quality and location do not come to the market often. Edgbaston is an affluent suburb in Birmingham and is well sought after by occupiers and purchasers alike. We know from the brochure that this property was refurbished in 2015, and the pictures show the building has been well maintained. There will no doubt be some improvement works due, but overall I think the property still presents well. This property is within Edgbaston Village, which is a stone's throw from Birmingham city centre, and thus there are plenty of city centre amenities within walking distance. Other local amenities include Five Ways railway station and the Birmingham Metro for easy onward links to the city. It is also worth mentioning the property has 26 car parking spaces, so there is room on site for private travel, often a big plus for senior level people who live in remote locations. In terms of layout, the building has an imposing aesthetic, which will certainly project status and grandeur for any would-be tenant. Further to that, there is a dedicated reception and reasonable open space throughout the building with fairly good ceiling heights. Finally, the property is sat within an attractive courtyard and has a good outlook onto a well-landscaped area with a pond. It is a pleasant setting for both staff and visitors. When we begin to look at the financials, we think a fair estimate of rental value would be in the region of £20 per square foot, meaning letting the building up could return a very healthy 11.5% yield. This is a good level of return. Now let's consider the risks. The obvious one is that the property is vacant, and so as an investor, you will be seeking to let the building. At the moment, office occupation is going through a period of uncertainty with demand fluctuating heavily based on location. With that said, this is a desirable location and hopefully more resilient than those truly out-of-town office parks that are struggling. One plus is, as a listed building, there are no vacant business rates to worry about. Another issue is this property is semi-detached, and therefore you have another abutting ownership to deal with. This limits control of the site and means other occupiers could impact on your tenant that are outside of your control. A good relationship with the neighbouring landowner will be essential. In terms of legal interest, you are buying a leasehold with several drawbacks. Firstly, there is a head rent of £1,500 per annum, which whilst nominal still needs to be paid and reduces your return. There will also be head lease terms you must comply with, such as contributing to the estate service charge. You will recharge this to the tenant once let. The leasehold has 84 years remaining. This is not yet a major issue, but it also isn't so long to not be of concern. Typically, once leases fall below 80 years, you may start to run into issues with lenders. Certainly after 60 years, you will struggle with finance and the value will start to fall away more quickly as any purchasers apply harsher adjustments to their valuations. This will primarily be by way of a simple yield adjustment. However, more sophisticated buyers will factor in dual rate sinking funds as a deduction. As expected, this is a character building and won't meet the specification of modern buildings. They are less convenient and do not have access provisions such as lifts to upper floors, level or ramped access for building users, and can struggle with temperature regulation. The construction of the building will be inefficient, the floor plates are smaller, plus the building is arranged in an L shape, creating isolated wings. It would be wise to expect ongoing maintenance costs. Another thing to point out is listed buildings must be maintained in a certain way, retaining their original look and feel. Therefore, these buildings are policed by conservation officers. Any works done to the building have to be pre-approved, even down to where you can and can't drill. You will need professional advice to manage this process, and anything you want to do will no doubt take much longer. If you wanted to change the use, you may come up against challenges in this regard. This all adds to the hassle of owning a listed building. Just a final quick note on the EPC, which is a D rating. It is worth considering this may need to be improved in future. and such works will need to be balanced against what is achievable within a period building. You may need to demonstrate that you have done all that can be achieved, and that an exception applies to the property. In conclusion, this is an attractive period building in a strong location. With an asking price of £3 million, I would anticipate pricing to be below this level. Given there is void risk, reletting incentives, and potentially some costs to factor in. Thank you for joining us in this property investment analysis. Get in touch with any suggestions for future videos, and links to the investment are in the description. For more property insights, click subscribe now. Then don't forget to like, comment, and hit the bell icon for notifications. This has been the Secret Surveyor, unlocking property investment secrets.